Today I'm going to break down for you one of the simplest and most effective tools in Forex trading, the moving average. In just 5 minutes, you're not only going to find out how the moving average works, but you're also going to learn a powerful 50 EMA trading strategy that you can start use right away. So without wasting any more time, let's dive in. So what exactly is a moving average? A moving average is simply a line that helps us smooth out price data to help us identify trends more clearly. Instead of looking at every little price movement, the moving average combines the closing prices over a set period and it just gives us the average price, which is constantly updated. This allows you to cut through the noise and see the overall direction of the market. In Forex, moving averages are used to identify trends, find potential entry and exit points, and even spot reversals in the market. And there are many types of moving averages, but we're going to focus on the two most popular ones. Now, this is the simple moving average and the exponential moving average. The simple moving average is the most basic one. It takes the average closing price over a set number of periods, like 20, 50, or maybe even 200 days. And while it's easy to calculate, it gives equal weight to all price data, which can make it slower to react to recent price changes. Now, the exponential moving average is more advanced. Unlike the SMA, the EMA gives more weight to recent prices, and that helps it react faster to market changes. The 50 period EMA is one of the most commonly used, especially by trend following traders, and I'll show you a strategy in just a second. Okay, in the next couple of minutes I'm going to explain to you how the 50 EMA trading strategy works and how you can actually make profit with it. Now, first of all, we're going to start off by copying those settings of the EMA. Just make sure it says EMA and it's also the 50 period one. Now, what else do we need for the strategy to actually work well? We need trending market, and this is exactly what you see here on pound dollar. I'm on the 30-minute time frame, but you can actually trade this strategy on the 15-minute and the 1-hour chart also. So we've got the downtrend. Now, the next thing we're looking for is the next bearish leg with price breaking below this support right here. And as soon as we start forming up this pullback, that's when we place our Fibonacci tool from swing high down here to swing low. And we place a pending order at the 61.8 level. Now, we're going to use pending orders because many times you will see price leaving a wick through that 61.8 level without actually forming a candle body right there. So that means if you're trying to enter manually, many times you will be missing those trades. That's why we use pending orders. Now, we place the target down here at the 0% Fibonacci level, or basically the most recent low. And our stop loss actually goes up here at the 100% level. And in many cases, you're not even going to get 1 to 2 with this type of setup, but you're still going to get a positive risk to reward ratio. In this case, we've got 1 to 1.6. But that's fine because we're using a very conservative stop loss. If you want to go a little bit riskier, then you can immediately increase your risk to reward ratio, and now it's looking much better, 1 to 2.4. And this is pretty much how this trading strategy works. It's very important to make sure that the EMA is above price action when you're going short and below price action when you're going long. This time we're looking at an uptrend example, and we've taken this trade from the 38.2 Fibonacci level, and that's completely fine if you have more confluences that are confirming this entry point. And in this case, if you look to the left, we've got this market structure. So let's say we're expecting for price to form a break and retest pattern. So we place our pending order at the 38.2, and in this case we wouldn't be placing our stop loss all the way down here. So let's say it goes slightly below the 61.8 just in case price wants to come down here, retest that 61.8 and then push off. So that's why we give it a few more pips to the downside. Take profit goes at previous structure, or it can go even higher depending on what kind of price action you're working with. So as you can see, we've got perfect retest of that 50 EMA from above, and then price pushed back to the upside. These are the kind of setups you're looking for. Now, if I have to be completely honest with you, I can't teach you everything about the moving average in just 5 minutes. However, you got the basics. If you think this is going to help in your trading, I've got a full course on moving average on our website, trendlineforex.com. That's where you can learn everything about this too, how to properly use it, as well as a few more strategies that you can actually start trading right away. I'll see you there.